any case, what I'm saying is that there's a lot more to go in gold. Don't take profits on the next surge. Maybe 9 months from now, if we're at $8,000 gold, consider it. But I expect this next phase of the gold-silver market move to be quite stellar. And one thing they've got different this time around, if you look at the other markets, there's times in the past when gold has gone up that there have been other alternatives. Like during a lot of that gold move from 2000 to 2011, stock market bottomed in 2002, remember, while gold was starting up. But even the stock market was advancing during a lot of those years. So gold had some competition. Right now, you look across the horizon and you can't find competition, which makes the situation even better for the gold market.
MichaelOliver is the founder of Momentum Structural Analysis, a renowned analyst in financial markets. MichaelOliver predicts a meteoric phase in the current gold bull market in 2024 and suggests the potential for gold to reach $8,000. Prices of gold rebounded on Thursday as the tensions in the Middle East and growing U.S. debt pushed investors towards safe haven assets. Notably, gold futures rose to $2,003 per troy ounce on the day, breaching the 2,000 mark threshold for the second time in a week and heading for the $2,089 mark, a level last seen in August 2020. Michael believes that silver and gold miners tend to outperform gold in the late stages of a bull market. Investors seeking exposure to gold can consider investing into gold miners. The advantage of holding gold miners is that their price typically rises more than the increase in gold prices, as gold miners will add their own margins to gold production. Gold rallying back to $2,000 so quickly is a positive sign for an eventual breakout. The miners, juniors, and silver space need gold to surpass $2,100 before they can outperform. Meanwhile, Michael emphasizes silver's potential to outperform gold, possibly breaking its historical resistance at $50. On October 28th, Rashad Hajiev posted on X, "Silver most likely will advance in two legs. First one should take it to $30 to $32, and second one to $40 to $42 level, which makes up around 75 to 80% from present price level." Silver rallied 80% in 2020 within 2 months. It is absolutely possible that silver reaches my minimum $40 target before year-end 2023. On the other hand, Michael suggests that the recent increase in gold prices isn't solely a result of geopolitical events like the current war. Now we present the clips of MichaelOliver's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
We've done a lot of research on it, and I state that I think that silver and gold miners will suddenly, like a snapped rubber band, catch up and outpace gold. That usually occurs late in a bull trend. If you go back and look at the 1970s, late 70s to 1980 bull market in gold and silver, and look at the move from 2000 to 2011 in gold, most of the move occurred in the final several quarters of the bull market. This is true with both the price of gold, the price of silver, and the miners. In other words, the miners in silver might have lagged gold even less than the last year, like the last couple to 3 quarters. That's when silver went ballistic in terms of percent gain, like go from $20 to $50 in a heartbeat, whereas it took it years to get up to 20. And you go back and look at the charts then. Again, late 70s, like 1979 to 1980, silver went off the page compared to gold. And it did the same thing in 2011, but it was very lagged to gold. Well, you've got to realize that this bull market in gold is already 8 years old. It's not a young bull market. And it wouldn't surprise me if we're now entering tectonic events that are underway. They will not move incrementally. These are big, noisy events. That gold will have its explosive part of its bull trend 2024, both for the price of gold, but especially the price of silver and the miners. I don't expect silver to stop at $50 in this next phase. I don't expect it to stop there. It's stopped there twice in history. I think it could go way beyond that. Now, again, context. Go back and look at the bull markets in gold, like from 1970 through 1980. It was a zigzag in 76, admittedly, a 50% correction. But gold went from $30 to $850 over a 10-year period. Okay, that's a huge percent. Okay. Then take 2000 to 2011, 11-year bull trend. Gold went from $250 to $1,920. A lot of that occurring in the latter quarters. We started at 1,054 in December of 2015. We've only doubled. So this bull market is aged, but again, most of the gain occurs late. That's a historic fact. But if gold were to match, let's say just match the multiples of the bull market from 2000 to 2011, we'd go to $8,000 gold, eightfold move. The events are far bigger than that are going on outside of gold. And I think the consequences could drive it even further. Well, any case, what I'm saying is that there's a lot more to go in gold. Don't take profits on the next surge. Maybe 9 months from now, if we're at $8,000 gold, consider it. I think gold knows this, and I think what's driving gold is not a war event, although it's a peripheral help. We had the Russia invasion of Ukraine in February of 2022. And if you bought gold then, you got hammered, okay? So he had a major war event, an implication, and yet gold went down. It was not at that point that gold needed to correct, and it did. And the Fed was going on a tightening process starting in March of 2022. So shortly after that invasion occurred, the Fed started the rate hikes. And so gold went down and congested, okay? And it actually sold off pretty good in the 1600s. So war didn't help gold then. I think the war now is only marginal in the sense that it increases the government's need for funding.
MichaelOliver anticipates silver vastly outperforming gold in the next 6 to 9 months, with the potential to surprise investors. 3 months ago, a Reuters poll predicted silver prices would average $23 per ounce in 2023 and $24 in 2024, sharply higher than the $20 for 2023 predicted in the last poll. Silver should begin to outperform gold as China's economy reopens and global manufacturing activity recovers, said Bradley Saunders at Capital Economics. He highlights the gold's strong performance, remaining resilient near $2,000, even amid Federal Reserve rate hikes and expectations of a stock market correlation. As per analysts at LBMA, despite the Federal Reserve maintaining interest rates at a restrictive level for most of 2024, geopolitical uncertainty in the coming 12 months will continue to support precious metal prices. MichaelOliver believes gold's performance reflects an understanding of central banks' panic and their likely return to monetary excess. Let's get back to the interview.
Well, the plunge we had late last month and early this month, got gold down to around 1820s. And there have been repeated sell-offs since the highs in March, April of this year, repeated efforts to break it back down. The market needed to cool off, after all. It had gone from 1613 back to over 2,000 in a handful of months. So it needed what we called an intermediate correction. It did. It had one. We think the end of that correction was last month. And when we turned up out of the low 1800s, we put out a buy signal at 1862. It was our first significant buy signal. We said, at that point, assume the downside is over. Well, when it cleared that 1862, within a handful of days, we're pushing the upper 1900s. And now today we're trading credibly over 2000. Same time, silver went from a low to a high of a $3 move in 10 trading days. It's since, over the last week, consolidated after those sharp gains. We think there's a lot more to come. Gold is not going to stop this time at the $2,000 barrier that it's hit. It poked up to 2,050 plus in 2020, and 2022 got up to 2,050, 2,070, fell back, and again early this year. We think those are coming out. Okay, momentum is already spoken. It says you're going through. Price guys are no doubt looking at the price chart saying, well, when do I believe it? Well, they'll believe it when it hits 2,100. Okay. We still think, though, so far, gold is in the leadership mode here. Silver had a pullback of about, right now it's trading down about 40 cents on the week, 30 cents on the week, whereas gold's up on the week about $10, $12. So gold has continued to be firmer than silver. But I think that's about to reverse, where silver is going to suddenly ignite in a way that will impress. Right now, silver's above 23, and I'll throw out a number for you. We get very specific with our subscribers, but basically above 23.40 on a close. Next week, watch that. I'm talking December silver. We think silver will go up another $2 so quickly it'll turn your head. Now, getting up into the 25s, even the price guys at that point will suddenly recognize, something's going on here. Because there have been 3 monthly closes, 10, 12 months, that have each peaked around 25. Traded above it, but that's about the peak close, peak close, peak close. We have some annual momentum structural reasons to assume that if you get back over 25 again, you're going to blow a cork big time. And I will project that if you get up there, if this breakout in the 2340s that I just defined gets you up into the 25s, don't unfasten your seatbelt, okay? Because you're likely to blow out $30 very rapidly. And we think silver over the next 6 to 9 months is going to so vastly outperform gold that it will be head spinning. At the same time, that's going on, there's some other major markets doing things that are helping to cause this event in the monetary metals. Asset. What core asset has been behaving well? None except gold. I mean, it's been lingering around the 2000 level repeatedly, even despite the notion that the Fed's going to raise rates forever, et cetera, or if the stock market goes down, gold has to go down. Nonsense. Gold knows better. I think it knows that the central bank is in panic mode. And there's only one outcome of that, and that is they're going back to monetary excess and panic. And gold will be the prime beneficiary.
Alongside the demand for safe haven assets, gold is also well supported by central bank demand, which reached a record level in the first half of 2023. Given the predictions of gold potentially reaching $8,000, what are your thoughts on this price milestone? Share your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.